Volatility holding steady, yields dropped, TLT bounced, the dollar is eyeing a critical bottom while gold and natural gas are quietly prepping their next moves. Uranium getting frothy. SP 500 and Nasdaq stretched, but no big confirmation candles yet. The real concern? Dow Jones and technology. One micro shift could trigger a major avalanche. And Bitcoin still slowly building atop. Welcome to Daily Market Waves by Investing Angles, where we decode every candle, chart every wave, and stay one step ahead before the crowd even blinks. And today we are starting with Volatility Index, as usual. And don't forget to listen to our major announcement at the end. So, the volatility candles are quite simple today. Everything is bearish. No questions asked. All three instruments that I tracked today, they produced strong bearish continuation or reversal candles. Although it was kind of strange to see a very strong bullish candle on Friday followed by a very strong bearish candle. Something is not right. And let's have a look at the bigger picture. So if we look at the 5-day closure today, so this candle that volatility index itself formed is not exactly a bearish one, and most likely it could be a bullish or a bottoming formation. So something similar that volatility index made here. So if you see, it was a small red candle, then a green one with a big upper shadow, and after that we will see a upward movement. And speaking about the weekly formation on the volatility futures, we had a strong bullish candle closing last week, and today we are seeing an attempt to negate it. Let's see how the week closes. So while the daily candles are bearish, the larger ones like 5-day and weekly are not so much. And one more thing I wanted to show you. So this is the perspective from the Elliott Waves. What we are seeing here is that off the bottom, the volatility index potentially formed an impulsive wave, and it is quite strong and very nicely shaped. We can see that wave 3 itself has a 1, 2, 3, 4, 5 breakdown, and well, we have two big gaps for in wave 1 and wave 5, but well, we know that these waves could be diagonals at this point, and well, this is the only concerning point. So we don't know the exact structure of wave 1 and 5, but the overall wave looks impulsive, and now what we could be seeing here is a very sharp zigzag for wave 2. So considering this was wave 1, this was wave 2, well, if volatility doesn't break and make a new lower low, and we can see a strong reversal candles, well, then we might be starting something bigger. That's the candles perspective for volatility. Now let's move on to the dollar index. Dollar index today formed a very strong bullish candle, and there is a possibility that we are witnessing the beginning of the bottom. However, from the candles and technical perspective, I would rather see another lower low before we can see a rally. Speaking about the weekly candle, I was thinking about it as a perspective of a strike 3. We have 3 green candles, and a very strong red one, which could be just a reset for a continued bullish move. Let's see how it closes. The week is just started. And speaking about 8-day frame, a very interesting closure will be coming tomorrow. We have a strong bullish candle on the 8-day frame, and another one, this one needs to close below the low of this green candle in order to continue down. Let's see if it happens. So far, This is a big question. And if we look at the Elliott Wave, so this is how we left it on Friday. Potentially this another impulse down, and I tend to think that this was wave 3 for the dollar index, and now we would be looking for wave 5. It could be kind of fast, and but it might take a couple of days. So that's the possibility, and from Elliott Wave perspective, it would be much better because the wave upward has been corrective mostly. It could be a diagonal, but highly unlikely at this moment. So I would be looking for a lower low before we can see a rally. Now let's talk about the bond market and TLT. So what we see today is a very dangerous closure. This is this candle. This is US 10-year yield. It candle closed exactly at the level of the low of the previous candle. So from the candle's perspective, it's a big failure, and now we would be looking for a move higher, potentially starting tomorrow. So that's and because this candle is treated right now as an inside candle within this big lower shadow. So that's the perspective for tomorrow and after that. So 5-day candles closed with another consolidation candle. So I was thinking at some moment that it could build a reversal. However, it ended up with just another consolidation. So this is bullish at this moment. The 5-day frame bullish. 10-day frame, unfortunately, it didn't form a reversal, a strong reversal continuation candle, but at the same time, it didn't confirm a bearish movement as well. So if we look at the trends and the technical signals, everything remains bullish on this frame, and well, it could be just a posing doji. We might see a few more consolidation ones before the move higher continues. So that's the perspective. Now let's have a look at the 20-year. This is 20-year maturity yields. So what I'm seeing here is still a potential for wave 3, although this wave is a bit complex right now, becoming a bit complex, and at some point I would be surprised if we can see a bigger corrective action for alternative wave 2 here, which is also a possibility. Let's see how it handles this boundary here and whether it rallies higher. So while this is the perspective, the red count remains primary at this moment. Now let's have a look at TLT. So we have an interesting closure today. First of all, on the daily frame, we have technically a confirmation of reversal. So we're looking for a move higher here. Also on the 3-day frame, we have a bearish engulfing. Oh, pardon, bullish engulfing. And the chances for the next 3 days to produce higher prices. However, we still need to see a confirmation. So this candle, it's by itself is not very strong. And I already discussed in our weekly report, in our weekly digest, that this would be the monthly closure, and practically it would be difficult to flip it bullish at this moment with just 3 days remaining. So we'll watch it, and we will discuss it in the next weekly digest, weekly report. Speaking about TLT Elliott Wave, so I'm not ready to change this perspective yet, at least for now. Let's see how it builds. So far, this wave is developing as an impulsive, and I would be looking for lower lows at the moment. So this part remains unchanged. And the final discussion I'd like to show here is just the candles on the spread, 10-year minus 2-year. So what we are seeing here, this was a strong bearish candle formed on Friday, and now we are looking for a typical reaction to this type of candle. So if it closes in 2 days lower than the low of this green candle, well, that's just gonna be a very strong reversal. So, and we know that if we see a reversal here, we can treat this formation as a potential double top here. Well, we might see a move down towards the 0 and below. So, and if you're interested in the chart, you can check our recent strategy digest where we discussed this and a few other larger charts for TLT and also for 10-year yields. Now let's move to commodities. And today we start with gold. So what is happening here? Gold technically formed a bearish Harami candle, but it is rather weak, and I don't see any strong technical support at the moment. In general, it needs to have a confirmation in order to register a reversal here. On the 2-day frame, the candle had a chance to form a strong bearish engulfing, but it was pulled up and formed right now technically a continuation candle. Speaking about the weekly was closed with the strong bullish engulfing, and now this is just the beginning of the week. We will see how it closes. So far, the odds on the weekly frame are bullish. No changes to the Elliott Wave formations, so potentially it's been wave 1, 2, 3, and 4, and I would be looking for wave 5, which can be much longer than wave 3 technically. Well, so this is no changes since we discussed it on May 15th, and I'm looking for these particular targets. Now let's have a look at the GOD trust. So technically the candle today the move was bearish, but the candle was bullish, and I think it still holds above major support lines. So the chances for a move higher are slightly better. From the weekly perspective, it hasn't made a decision yet, and we need to see a closure above either green line or below the red line in order to make a directional call. Well, that's all for gold. And if you're interested in silver, check our commodities weekly digest. We discussed silver. I believe nothing changed since then. Oil. Let's talk about oil. And today, oil formed a bearish candle, and it flipped 8x20 MA lines in a bearish cross, technically opening a path to lower lows. On the 3-day frame, there was potentially a bullish Harami. However, we need to see a strong confirmation. So far, this is not a reversal candle. And on the weekly frame, after bearish closure of the last week, we're looking for a continued move down. In our commodities digest, we discussed the watershed between bullish and bearish closures on the monthly, and if you want to see them, just go and check this information. It remains unchanged. Speaking about the short-term frame, potentially this was an impulse down and wave either A, we see of a larger wave 2, or wave 2 could be completed here. So we would be looking for a continued move down one way or the other. So it could be this way, or it could be slightly longer. So we have a bounce, and after that we will be looking for this particular move. At this point, these are two most probable targets I would be looking for. So, and finally, for oil, let's have a look at major oil players. Technically, ExxonMobil formed, from candle perspective, it could form a reversal on this formation. However, it is rather weak from technical perspective, and I would be looking for a stronger move on a larger frame. So Chevron is stronger at this moment, and unfortunately ConocoPhillips is not that much. This candle is bearish. So I would say the next 2-3 days would be critical for these. And if we look at the monthly closure, so far it is looking bearish, but it's a caveat. It could also be bullish depending on exact level which it closes. Let's see. So the next 3 days would be quite instrumental for this, and we will be monitoring it closely, particularly on Thursday. Well, that's all for oil, and I'd like to discuss uranium next. So this is the closure today. So what we are seeing here is that we have two candles closed above Bollinger Bands on the daily frame, and this is, well, this is a good setup for a reversal. I think that uranium URA ETF is greatly overbought, and we would be looking for a strong reversal here. And if we look at the 3-day frame, so for example, this is the biggest concern. So I just measured the Bollinger Bands, whether it's 2 or 3 standard deviations. So we had today uranium ETF trading above 3 Bollinger Bands, which is practically 0.15% probability. So I think it's about one in a 600 chance or something. So now what we'd be looking is for a reversal. So this candle is not healthy, even though it's green and big, but it's stretched way too high. So we would be looking for a pullback. The question is right now is what type of pullback, whether it's corrective or impulsive, and how deep it would go. So be prepared for this one. Speaking about Quad U energy fuels, they're in the same situation. The daily candle is stronger, so practically it's bearish in these conditions. Let's see what it will bring tomorrow. And the same strong stretch for the 3-day frame. The weekly right now is not really bearish, but the week only started, and we will see how it closes. So far, the weekly candle was a bit bullish. And speaking about the chemical corporation, CCJ, we have a spinning top, most likely, and a similar technical condition. I would say that we would be looking for a fairly strong reversal here. And for chemical corporation, for CCJ, this is our short-term perspective. So now we are looking for two potential paths here. One is extension. This was wave 1 of the bottom, with the potential for wave 1 being a leading diagonal. 1, 2, 3, 4, 5. Wave 1, pullback for wave 2, and a continuation for wave 3. Or this could be wave B, especially if we look at this perspective. So this would be wave A, B, and C. The only thing we need to change a different degree. So if this is the case, then we'll be looking for wave C down here. Well, that's another perspective that is right now remaining on the table. So this is all for uranium. Now let's talk about natural gas. Natural gas formed a very interesting candle. While it's red on the daily frame, it closed above the previous potential bullish reversal formation, and technically it confirmed a reversal. So let's see how it makes how it moves tomorrow. So far this is a bullish closure today, and the chances for moving higher, and we can see that the futures already opened higher here above 50-day moving average, which is a very positive sign for tomorrow. And on the 2-day frame, this formation is also neutral, slightly leaning bullish, and a very good chance for moving higher. So on the 5-day frame, it's an excellent news today. It for natural gas formed the piercing line, which is viewed as a bullish reversal candle. Now the question is, it needs to confirm in the next 5 days. So in the middle of next week, we should see a price higher. If it closes above the high of this red candle, this could be a strong rally setup. Now let's Elliott waves. Yes, so Elliott waves remain the same. Practically, we are tracking them since mid-May, and we said that this could be the target for a pullback, and after that we are looking for a continued move higher. So I'm assuming wave 1 and wave 2 are done, and the natural gas might be looking for wave 3 here. So that's the perspective for short term. For longer term, we discussed it in the weekly digest, commodities digest. Now let's move on to the stock market, and let's see what kind of signals, what kind of information we are getting here. So candles are undoubtedly bullish today. Daily candles, SPY, Triple Q, DIA, IWM, all formed strong bullish candles. And well, nothing else to say here. So, and however, I'd like to see a stronger volume and the other supporting indicators, but at this point, the daily candles are bullish. Now, if we look at the daily futures, so they practically just another confirmation of a bullish move. So they formed bullish engulfing for all 4 indices. Now the questions start when we look at the bigger frames. So this is the 5-day frame that futures closed today, and this is the biggest concern. So let's start with Dow Jones. Dow Jones formed a very strong bearish engulfing, which is at the same time a hanging man, and the chances for Dow Jones to move lower in the next 5 days are fairly significant. A very similar conditions are for Russell futures, RTY, and so very similar to what Dow Jones YM formed. Speaking about Nasdaq and the SP 500, they are not as strong as as Dow Jones and Russell. However, they are significant enough, and this candle, especially its positioning and the technical support, are saying that this could be a strong reversal candle. So it could be a combined harami and also a hanging man, similar for S&P 500. So we will be monitoring this very closely. And now let's move on to Elliott Wave. So this is our chart that we are tracking for a while, since April 22nd, I believe, when we said that it's going to rally, and it rallied over 10%, and our swing room spotted this move absolutely magnificently. So now what we are looking for is a potential move down. So the wave down could be impulsive, and this wave up could be just corrective. So for me right now, purple and red count remain the primary, and the green one is not it doesn't have a lot of probability at this moment. So let's see how it moves. And now let's have a look at the shorter term. This is what I was talking about. So this is the chart that we discussed earlier in the last week, May 20th, and we had an impulse, and this chart was discussed on Friday. So what we can see that the red count technically is invalidated, so we can safely remove it so it doesn't make okay. So and now we are looking for a blue count, which is potentially an impulse down, and this could be wave 2. We know for wave 2 it can stretch as far as the beginning of wave 1. So as long as it stays below this red line, this still can be considered as wave 2. And speaking about its structure, especially the very first wave upward, it's not entirely an impulsive structure. So there is a good chance that this is just a bearish flag before moving lower. So let's see what it brings, what tomorrow brings. And for a big confirmation, if the index moves below this level, 5843.75, it will likely be a confirmation of reversal. So now let's have a look at the sectors. So if we look at them, everything looks fine, and all candles are green except for utilities, which is kind of neutral bearish, and even healthcare managed to form a green candle here, pushing the price above the 8 days EMA. And the consumer discretionary, even energy, is bullish. But the only thing I have is one little event that happened to the technology sector, and I will discuss it at the very end of this presentation, because technology sector is our special feature today. So let's move on to large caps, and I'd like to say that all closed with very nice green candle. Microsoft, Meta, Nvidia, Amazon, Tesla, Berkshire trying to form a bottom here. The only concern I have is Apple. So these two candles on the 2-day frame, 3 candles, is most likely a 3 black crows, and right now it is trying to reverse. If we look at the daily candle, well, it could be a bottom or maybe just a closure of the gap. Let's see. So far this is not confirmed. And if we look at the weekly frame, the weekly was very strong bearish, and we are seeing further bearish further growing bearish momentum. Now let's have a look at Nasdaq. So Nasdaq is technically the same, and this is the chart that we discussed with our members in the weekly digest. So this was our target at that moment, and so far we are seeing that Nasdaq potentially formed a leading diagonal, and what we know about the diagonal, they tend to push the price back to almost the level of origin without crossing it. So if this happens overnight, this will be a very interesting development. So, but if it crosses the line, I would be looking for higher prices. But if this line holds and the Nasdaq reverses down, it would be a very interesting condition, and it can potentially start another wave down. So this would be the red path. Well, that's Nasdaq, and now let's have a look at the technology sector, as I promised. So, because I can see some very troublesome development. So, first of all, the daily frame. And this is a very significant, I think. So, what XLK did today, it made a bearish MACD cross. Just a tiny little thing by 2 basis points. But first of all, it's significant because it was made on a very strong bearish on a very strong bullish move on a green candle, and while the green candle happened, we can see a bearish cross. And speaking about the history of this cross, so this is the all-time frame for technology. As you can see, it is of the highest ever magnitude, and of a record magnitude. And I have a very big concern about potential implications for the move like this. So most likely we should see at least several days of decline. How big they would be, that's still a question. And another concerning signal today is that despite the move higher, the 200 and 100 daily moving average, they expand further, and this is right now they have a bearish they have a bearish 100 over 200 cross, which is still active, and further expansion. This is not a healthy sign, especially combined with MACD. Well, that's the perspective, and I think that technology will play a big role, particularly tomorrow or in the next couple of days, because technology is right now at about 33 to 35% of the overall market cap for the US market, and I'm talking about S&P 500. Well, that's one thing. And speaking about the weekly closure was also a very concerning one. So it closed this red candle last weekly. It closed just 2 basis points below the open of the green candle, making it very strong bearish combo. And let's see how it closes this week. So far, the odds are bearish until negated. And the monthly closure will be also a critically important one. A closure above 227.15 will be bullish. A closure below even 1 basis point will be bearish. Speaking about the Elliott Wave, I think that technology formed a fairly nice impulsive wave down. 1, 2, 3, 4, 5, and I'm considering this as wave A. And now it is completing wave B. So once this wave is complete, whether it makes another high or not, the main thing, it needs to stay below 243.12. If it stays below this line and drops down strongly, we would be considering 2 different paths, either blue of a larger correction, ABC for a bigger B, or direct impulse B to C. Well, that's the perspective for the technology, and the next couple of days, and particularly on Friday, will be crucially important. And the final one, I just wanted to touch point on Bitcoin. So this is the chart that I shared on Twitter or on X on May 22nd, saying that this is a stretch, and now we have a very concerning candle development. I said that if it forms a bearish engulfing, it could be a very strong reversal pattern. So far, this is live chart. We have a bearish engulfing. Indeed, it happened, and we had 3 candles potentially forming a setup for falling 3 methods. Today is important. It's closing in 42 minutes. So far, the candle is neutral bearish. It will depend on the exact level. So far, if it closes below yesterday's open, it will be a bearish engulfing. Be prepared for the next move down. If it closes with a green candle, it still will be somewhat bearish neutral, because I highly doubt it's gonna close above yesterday's high. Well, just be prepared. This is a bearish formation, strong bearish formation. We're just taking a pause, maybe just giving a gentleman's exit for those who are very vulnerable at the moment. So that's getting closer to today, and let's summarize. So today's landscape continues to evolve. Yields fell and lifted TLT, so dollar index is pressing for a reversal. Gold and natural gas are primed for the next leg up. Oil continues along the bearish forecast we laid out. Uranium is overextended, caution warranted. SP 500 and Nasdaq rallied, but without conviction. Dow Jones remains the weakest link, and XLK technology may be the next domino. Bitcoin continues to shape its top. Be careful there. A major announcement. Swing signals now included. Starting today, we are sharing SPY directional signals from our private swing trade room directly in these daily and weekly videos. Signals are shared 1 day later. No stop loss or exit data provided. Still, this room has clocked plus 68% unleveraged since January 2023. If you are curious and serious, reach out to us at help@investingangles.com, and we are happy to extend a sizable entry discount to committed traders. And today's signal, as of Friday, our swing room stays flat as of Friday. And the quick reminders: subscribe and hit the bell. YouTube will not notify you unless you ask. Check out our weekly digest series, exclusive, member-only, long-term coverage on indices, commodities, and global macro signals. Visit investingangles.com for latest offers, sharp charts, and strategy reports. And finally, like, comment, and share this update on X, Reddit, Discord, WhatsApp, or wherever smart money talks. Thanks for tuning in to Investing Angles, where forecasting happens before the crowd even blinks.